Hello friends, this is Raj Sastry from Raj Option Trading. Today is August 26, 2021. I want to talk about one of my favorite companies in South Korea. The company is Coupang. It's into internet retail. Think about Coupang as Amazon of South Korea. It's growing popularity and doing great. So with that, let's jump in and get started on Coupang. So Coupang, if you look at the leadership here in the Glassdoor, the review is 4.0 for the CEO Bom Kim, and looks like he has got very good approval rating, and I like this 90% approval rating. That says something about the CEO and the leader. Leadership is strong. And as you look through the leadership here, we got Bomb here, pretty young new generation leader here, and we got the CFO here, Gaurav, and a couple others here in the management chain here. Looks like at least by looking at the picture, by reading through what they're doing, looks like they got the right intention to really lead and grow and really put customer first. So that's one thing I like about this company. They're not afraid to spend money today to grow the business tomorrow and wow their customers. So that's why I think this company has got what it takes to become the Amazon of South Korea. Look at Amazon, they're also spending a lot of money to really improve customer experience, and this company is doing the same thing and following the suit. So with that, if you look through their earnings here, they got nice quarterly revenue growth, 71%, and also adjusted gross profit growth of 86%. And as you look through the numbers here, it's a 15th consecutive quarter over quarter 50% revenue growth, and also revenue is growing very nicely and reaching $18 billion run rate right now. So that's a very good progress that Coupang is making. And if you look through the revenues here, the net revenues 71% increase from the previous quarter. And as you look through, there is a good revenue growth here, 57%. Active customer growth, very impressive, 26%. Total revenue for active customer, nice 36% growth here. And as you look through, gross profit also improved and adjusted EBITDA also improved. So overall, company is doing the right thing here. And as you see here, I mean, they do have some net loss, as you can see here, but they're trying to reduce the net loss from 518 back in 20, from I mean they're actually increased they have increased their net loss, which makes sense for these growing companies because they have to invest in their own platform. That's why you see net loss increasing, which is what many of these e-commerce companies do because they have to reinvest and take it from there. So with that, let's look through the profile of this company. Ticker symbol CPNG Coupang. It's a leading e-commerce business in South Korea. They sell various products, something similar to Amazon. They got home goods, decor, apparel, beauty products, groceries, and so on and so forth. And stock price is $30.86. Its stock is completely sold out at this level. It's a good entry point right now, and the market cap is $1.7 billion. If you look through the stock chart here, it's very recent IPO in 2021 back in March time frame. Since March, company has not done great. As you see here, we got one down here, came up, went all the way down. Now there is a bounce back. I see that they got a good support level around say 30 or so. I think they should see a nice bounce back from these levels. And as you look through the CEO here, Bom Kim, looks like he founded the company and he was the CEO since May 2010. And also he attended Harvard University, earning AB degree in government. So it looks like he's got some good exposure. He was in USA to earn his degree. And looks like he's got some good insight and expertise in building the business. So that's why I feel like he's a next generation leader. He knows how to grow the business. That's why he's prioritizing the company's growth instead of showing some short-term improvements in the revenue. So I think that's always good, a CEO who's got long-term horizon. That's why I like the CEO. They're not into short-term, projecting some growth, but they want to look at the long term, invest for the long term. And as you look through the news here, nothing specific that comes out here. Looks like this is one of the broken IPO per Motley Fool, and they can really bounce back nicely, before the end of the year. And folks are wondering because this stock has been dropping off. Folks are wondering is it a good time to buy? And looks like Coupang can easily support or afford to drive business growth, mainly because they're spending and investing a lot of money in the business growth. So folks are also wondering if there can be $1 trillion stock by 2030. So overall, I feel like company has done the right thing. So far, Wall Street has not noticed its progress. Could be good time to really showcase and really invest in this company. So that way we got a good profit performance as we go forward. So let's look at the industry peers here. Here you got internet retail industry peers here. As you look through here, we got at the top Tak Hung. It's a Chinese-based company into arts. So as you can see here, this stock has gone up so much. 2-3 months ago, this stock has fallen down to earth. So now it's making its progress. Right now, I would still buy slowly here. RSI being 49, and stock is off 85% from 52-week high. With the TCAT here, I would buy this on down days. This gives a lot of opportunities. I like this company, but it's got its down days. You should accumulate on the down days here. As you see here, there's a high short float here, 11%. That's why you see a lot of short squeeze happening here. And then we got Revolve. Revolve is again a great company here. Right now, $59 stock. As you scan through here, institutions are buying, as you see here. Insiders are selling a little bit. And nice sales growth here. I love the sales growth of this company, quarter over quarter, as well as 1 year. Nice gross margin and net margin. Revolve is making money right now. RSI is 49, indicates stock is oversold at these levels, and stock has a nice short ratio here that can cause short squeeze as we go forward. And performance right now in 1 day they dropped 5%, 2 week 10%. So it could be good time to buy some Revolve at these levels and wait for a nice bounce back here. And then you got Jumia. Jumia is again a great company. They're Amazon of South Africa, as many of you know. $20 stock. As you see here, they've done nicely for 1 year, 96%. Stock has been dropping off late. They got positive sales growth here, and RSI is 40, tells you stock is completely oversold. I love Jumia. I would accumulate Jumia at these levels. This stock also will bounce back nicely. Stock has been taking a beating of late. Then we got few more here. I also like Chewy here, CHWY. Right now RSI is 57, tells you wait a little bit, but still okay to buy a little bit at these levels. And same story with Etsy. I would wait for a little bit cool off. I love Mercado Libre. Right now RSI is 66. Good to wait for a little cool off and buy Mercado Libre. And then you got Fetch here, Farfetch. It's right now RSI is 44. Nice sales growth. I love this sales growth. And also RSI is 44. I would buy some Farfetch at these levels. And then you got your car parts. Looks like institutions are buying car parts, as you can see here. Nice sales growth. RSI is 49. Tells you stock is oversold. I would buy some car part at these levels and take it from there. I love Pinduoduo and JD. Right now, Pinduoduo still you can buy. RSI is 58. JD probably wait for a small pullback here. RSI is 60. And then you got my favorite here, Amazon.com. I would probably buy Amazon.com at these levels. Stock has been depressed for a couple of months here. Very low RSI. 44 at this point. I would buy some Amazon.com too. And then you got your HEPS and VIPs. Both have got very low RSI, as you can see here. HEPS right now does not have any sales growth to show, but I think it's good to buy at these levels. And VIPs, I think, is trying to bounce back right now. I would buy some VIPs at these levels. And then you got Wayfair. Wayfair is a great stock, has been uh, falling off late. I would buy some Wayfair at these levels. It's got yearly sales growth here. RSI is low, which is 1349. And ThredUp has been beaten up of late. I would buy some ThredUp at these levels. RSI being 37, completely sold out. Good to buy some ThredUp at these levels. We'll go into next slide here. So here we got SFT, a $7 stock. Institutions are buying SFT here. It may be good to buy along with the institutions. And as you see here, RSI is 42, tells you stock is oversold. Also witnessed by this red in 2 week, 1 week. Next we talk about Coupang, the company that we are deep diving today. Coupang is a $30 stock right now. As you can see here, insiders are selling a little bit, but institutions are buying. Nice gross margin. Net margin is negative. Company is still not making profit. And as you see here, RSI is 35, indicates stock is completely sold out. And no love from Wall Street. Stock is down all the way from 1 day to 1 year. So that's why I feel like company doing the right thing. Very early stage IPO. They're trying to spend and allocate capital to long-term growth. That's why there is some short-term pain right now. This company can really overcome it as we go forward. And then you got a couple more here. Dada Nexus, it's a Uber of China here. Right now stock is oversold with the RSI is 54 here. I would buy some Dada Nexus on any down day. This was down like 2-3 weeks ago as China cracked down on their companies. And then you got Overstock. Overstock is a great stock. I love it. Very good trading opportunities. And right now RSI is 48. You can still buy this company. Nice sales growth. Overstock, this company knows how to adapt and grow. And then you got Alibaba here. Alibaba is a great Chinese stock. I love this company. Right now RSI is 37, tells you stock is oversold. It's good to buy Alibaba. This stock can jump up as Chinese crack down, cools off a little bit. And then you got Baozun and Poshmark. Baozun RSI is 42 here. It's good to buy at these levels. And same is the story with Poshmark. Poshmark is completely sold out with the RSI 35. Now they're trying to bounce back. So with that, I would say pay attention to what insiders are doing. As an example, if you see Dada Nexus, SFT, and even RERE and Poshmark, the institutions are buying. So that's why you can also buy along with the institutions. And if you're an options person, pay attention to IV percentile. When the IV percentile is low, like you see in SFT and even Overstock, you're not paying too much to buy call options here. You could buy long-term call options, but when you see high IV percentile or high volatility like Dada Nexus, which is 63, or Baozun, which is 61, you could instead employ option selling strategies. Maybe sell some put options or put spreads under the stock price, or look for selling some strangles. Make sure you have some protection at the call side. Maybe buy some higher priced call option, so that way you protect yourself. So that's the strategy you can employ. And as you look through the previous slide quickly, pay attention to IV percentile as usual. It's okay to buy long-term call options for stocks like Revolve, Jumia, and wherever you see low IV percentile, it's okay to buy some call options. But otherwise, if it's a high IV percentile, wait a little bit, no need to rush. So with that, let's jump in here and look at few companies here. So starting with Revolve here, So Revolve, I think it's a great internet retail play here. As you see here, nice looking chart here. Stock is in a bullish territory right now. It's trying to bounce off of its 100-day moving average, as you can see here. I got 200-day, 100-day, 50-day, and 25-day. Stock is bouncing off of its 100-day moving average here. I would be a buyer at these levels. As you can see on the balance volume here, it tells you right now smart money is flowing into the stock. That's why even though stock dropped a little bit, on the balance volume stayed pretty steady here. That's why I think this is a good one to buy at these levels. And also IV percentile is low, and RSI is also low. That's why I think you can see a nice bounce back in this stock. Next is Jumia. Jumia, I love Jumia. It's a Amazon.com of South Africa. As you see here, stock has been taking some pain of late. Right now, it's a bearish, indicated by long-term 200-day moving average all the way at the top and short-term 25-day moving average all the way at the bottom. That tells you stock is in a bearish territory. Right now, it's trying to make its way higher. As you see here, we have some positive positiveness right here. Stock is trying to bounce back. So slowly you could see the short-term moving average moving up and the long-term moving average going down. So at present in a 3-month chart, it looks completely bearish. But as you look through here on the balance volume, tells you folks are buying and accumulating. This is what big players do. When the stock comes down and consolidates like this for a long time, they accumulate, so that way they have a nice position to take on and make sure they profit from the bounce back. That's why I love Jumia. I know there is a lot of short-term pain here, especially if you're a call option buyer. I think you'll be losing some money here because of prolonged downturn here. But I would say stock is very cheap here, $20. Buy the stock instead, so that way you don't lose the value with the call option. So that's a strategy I would do for Jumia. Great stock. We should see a nice bounce back. So then we got Farfetch here. Farfetch is another player that I like. They're also into this social media type selling. They also sell second-hand luxury goods and apparels. As you see here, stock is completely sold out here. Now trying to make a comeback here. I would buy some Farfetch at these levels here. Right now it's bearish with the 200-day moving average at the bottom here, but I can see a nice bounce back already here. And also on the balance volume is going up nicely. That's why I think it's a good one to buy. And as you look through Farfetch here, you do see here nice sales growth here. I like the sales growth, low RSI. And also the previous stock that we talked about, Revolve, nice sales growth. Jumia is also okay, sales growth here. So with that, I feel good about Farfetch. Here I would buy some at these levels. And then you got CarParts here, PRTS. Nice sales growth. I love the sales growth here. And RSI 49 tells you stock is oversold at these levels. As you look at this company here, CarParts, this gives you a lot of good trading opportunities. Up, down, all over the map. So that's why I love this company. I think it's a good one to buy at these levels. I see that it's steady on the balance volume here. And if you look through these 4 companies here, pay attention to short ratio here. 3 of them have got high short ratio. That's why these companies are making their comeback here. On whenever they do comeback like this with the high short ratio, that will make the stock go up further because shorts have to start covering and buying the shares that they're short. So that's why I feel good about these companies. They should see their bounce back continue as you go forward. Next, we got a couple more here. First one is Amazon.com. Right now, as you see here in a 3-month chart, it's trying to turn positive. A couple days ago, it was completely other way around with the long term at the top. Now it's trying to improve I think in a one-day chart, it's doing nicely right now. In a one-day, one-year chart, we got 200-day moving average down. It's trying to bounce off of its 200-day moving average. Nice on the balance volume. So I feel like companies ready for it turnaround at this time. I would be a buyer of Amazon.com at these levels. And as you see here, Amazon.com has got nice sales growth and it's got very low RSI 44. IV percentile is also low, so it tells you can employ some option trading strategies here. But be careful, it's been down for a while, so probably you can buy some share stock itself or maybe a call spread or something along those lines. And then you got here HEPS here. HEPS is O mark, as you can see here. Nothing to show off from a sales growth perspective. Low RSI. And as you look at the chart, I think they got their earning coming up today, 8/26. I would probably look at how earning goes and buy some share here. Right now, I think stock is trying to make a comeback when it comes to on the balance volume, and also stock is trying to bounce back at these levels. And then you got here Vipshop. With the Chinese crackdown, stock has fallen down all the way here. Now trying to make a small bounce back. I would buy some Vipshop at these levels. We should see some nice bounce back. Vipshop also, as you can see here, stock is sold off with RSI 44. Nice sales growth. I love the sales growth here. Next is Wayfair. Wayfair is an internet retailer when it comes to furniture and home decor. Stock is kind of all over the map. This gives very good trading opportunities. Typically, this carries a high short ratio, as you can see here. So I would be a buyer of Wayfair at these levels here. On the balance volume is pretty steady here, and stock is trying to bounce off of its 200-day moving average, as you can see here. So I would be a buyer of this company. I have seen this stock for a long time. They got a history of bouncing back nicely and squeeze all these shorts here, 22% short ratio. Next, we got a couple more here. First is ThredUp. ThredUp, I think it's a great stock. Right now, it's in a negative or a bearish territory. Stock is below its 200-day moving average, trying to bounce back. I think we're catching this at the right time. And on the balance volume tells you folks are accumulating and buying the stock at this point. I would be a buyer of ThredUp at these levels, and we should see a nice bounce back. Right now, there is nothing to show from a sales growth perspective, but as you can see, institutions are buying ThredUp. They understand stock is sold off. They're buying right now. I would be a buyer along with the institutions here. And then you got SFT here. It's pretty much in the trading range since last December, going down a little bit. I think they do have institutions buying their companies. And as you can see here, RSI 42 tells you stock is oversold. I would buy some SFT at these levels and take it from there. And then we got the stock that we are talking about today, Coupang. Coupang, stock has done nothing for a long time. Companies investing in the long-term growth. That's the reason I would buy Coupang. Even though by looking at the chart is ugly, but by looking at their quarterly earnings and their transcript, looks like the company doing the right thing for the long term, and that's why I would buy the company here. And then you got here DADA. It's a Chinese Uber here. Right now the stock is trying to bounce back at these levels. RSI is 54. I would buy this company on the down days and accumulate and take it forward. So we got one more chart here. Overstock is one of my favorite stocks. Stock makes up and down movements all the time. Great trading opportunity here. As you see here, they got nice sales growth. I love the sales growth here. 57 is great 1 year sales growth. 4% is okay, not so great. They do have good gross and net margin. And as you see, RSI is 48, tells you stock is oversold. Stock is trying to make a comeback here, and also we got on the balance volume pretty steady, ticking up. That's why I like oversold at these levels, overstock at these levels, and I would buy some overstock here. Next is Alibaba. Alibaba has been going up for a while now with the Chinese crackdown, showed some positiveness after the earnings here out by Alibaba on the down days. You have to be a little more patient here. Don't buy call options, because as you see here, if you bought call options on this stock, you'd have lost your money because prolonged downturn, and pretty much going down slowly. So that's why I would buy stock very slowly and accumulate. This will bounce back nicely as you go forward. Then we got Baozun here, one more e-commerce play in China. As you see here, they do have nice sales growth, and they do have RSI 42 tells you stock is oversold. Company is making money, net margin 4%. So I would slowly accumulate this company also. This should do well as Chinese crackdown cools off a little bit. Last one is Poshmark, again into social media, second-hand apparel. I think the stock is sold off completely. As you can see here, 200-day moving average on the top and 25-day moving average at the bottom. That's a bearish indication here. Stock is now trying to make a comeback here. I would buy some Poshmark here. You'd be pleasantly surprised as you go forward. Poshmark has got nice gross margin, as you can see here, and institutions are buying Poshmark, as you see here. That's a great sign here. So with that, I would be a buyer. We'll go forward. So now let's go into Coupang into a little more detail and deep dive on Coupang. As you look here, Coupang August 12, we got a downgrade from Deutsche Bank here, from hold to actually upgrade from Deutsche Bank from hold to buy. So that tells you folks are understanding this company has got great potential going forward. And as you look through here, earnings per share, I think company is making some progress here. 2018 earnings per share is negative 64. They improved a little bit in 2019, negative 45, and improved further in 2020. I think that's a good trajectory here. That's good. And what I like about this company is look at the sales growth here, going at a nice clip. So that's the reason I like this company. They're not afraid to spend money, as you see by earnings per share, it's negative, to grow their top line. I think that's a great story. That's how companies like Amazon.com build the entire an empire. They they basically prioritized their long-term success and took some short-term pain and invested in their own product. That's why I see same trajectory here. Coupang is investing in themselves, showing great revenue growth, but they're also taking that money to invest in their own future growth. And shares outstanding is pretty steady here. Nothing wrong. I think it's good for a company to have shares outstanding under check and grow the top line, as you can see here. And from a fundamental perspective, Coupang is a $30 stock here. Insiders looks like they're selling some, but institutions are buying the stock here. That's a good sign. And nice gross margin. Net margin is negative. Company is not showing profit yet. RSI relative strength index is 35. That tells you stock is completely oversold at these levels. And as you see here, institutions own nice 85% here, and stock has been dropping off recently, all the way. That's why I feel like it's a good value here. Company is doing the right thing, prioritizing the long term, taking some short term beatings. And if you look at the trading volume, nice trading volume, you can trade in and trade out the stock nicely. Very liquid stock here. They have a lot of cash, $4 billion cash here. They do have some debt which is manageable. And as you see here, they are below their 20, 50, and 120-day moving average. As you know, they are right now squarely in a negative territory. Even they're below 200-day moving average. That's why I feel like it's a compelling value here, given they're focusing on the long-term growth. And if you look at their fundamentals, this company does not have too many quarterly earnings under their belt here, just 2 quarters. As you see here, stock was 49 in March 31st, 41 in June, now it's 30. So I think at this time, probably it's a good level to accumulate and buy the stock. Even the market cap was 85 billion, became 72 billion. Now it's 53 billion. So because it's just a young company, Wall Street has not figured this company out yet, and this company is not afraid to spend a lot of money to further their logistics, their e-commerce, add new categories. That's what they're doing. They're really adding more and more categories and spending money on themselves and not afraid to show some short-term pain. That's why stock is falling off, even though they got long-term growth in their mind. So with that, let's jump in here. Looks like they did give positive earnings, positive revenue surprise here, and also positive earnings per share surprise. It's a 1 cent, but still it's a surprise. So I think company doing right things, but no love from Wall Street yet. And if you look at the performance here, it's a young company, just the IPO in 2021. They're 37% down, after the IPO. If you look at the monthly performance here, not too many months under the belt, they were down 15% in April, 21, 2% in May. They went up a little bit, down again in July and August. Lot of pain here, lot of red here. And then as you look through here, weekly performance, more red than green. You got some greens here, but more red. So that's why I feel like, right now if you look through here, it's trying to improve. So even though 8 August week, 12% down, now it's less, now it's less. So that's where you can see stock is showing some progress here. I think this is a turnaround as you see here, and from here it should bounce back slowly and show some green as we go forward. And if you look at the daily performance here, more red than green, but as you see here after this drop here, it's showing some progress here. I think this is time to start accumulating this stock along with the big institutions and get ready for a bounce back. Now let's look at the technical, from a chart perspective. As you'll see here, Coupang stock has been doing not so great. Trading range steadily coming down, as you can see here. They had their quarterly earnings, in August. They announced on August 11th. It's trying to show some slow momentum here, slowly trying to make a turnaround very slowly. So as you look through RSI is 38, completely oversold level at these levels. IV percentile is very low. It's okay to buy some call options, but be careful, buy long-term call options so that way you don't lose money in the short run. And DMI perspective, its stock is ugly. Red line above blue line, that tells you chart is ugly right now. And on the balance, volume is trying to hit low right now, so that's why it's okay to slowly accumulate at these levels. Check-in money flow is indicating smart money is trying to understand where to go right now. Right now it went up and now it's a little bit going down. That's why right now you have to be a contrarian to invest in this company. The moment all the charts trying to show up nicely, the company stock will be already bouncing back up nicely. That's why I feel like this is the time to buy Coupang. Chart is ugly. There is blood in the market. That's when you start buying Coupang and accumulate a nice position. Now let's look at what options market is telling us. So we got here option chain for January 2022. As you see here, stock is around $30. There's a nice option open interest 965 at $30. People are buying, call options with the strike price 30, hoping for a nice bounce back. As you look through here, people are also buying call options all the way to 40, 50, and whatnot. We got a 372 in at $50 strike price or 52.5 strike price. And if you look through put options, folks are also buying put options to hedge their position, but the call option volume is much higher compared to put option volume. So that's why I feel like there's some bullish sentiment here. Folks are thinking this short-term pain may be about to end, and we should see a nice bounce back. That's why more call volume here compared to put volume. So now we will also look at quick option statistics. As you see here, right now calls, we got 18,000 contracts, puts just 2,000 contracts. So that makes the put call ratio at 0.1122. That's bullish because there is a lot more calls than puts. So I think that's a good indication. We should probably watch this a little bit. Even though you're not an option seller, it's good to understand what option market is thinking. That gives you nice heads up on what might happen in the future. So with that, let's jump in here and go into the quarterly earnings. So we'll look at this in a little more detail here. So Coupang had its earnings on August 11, 2021, and they basically beat the earnings per share by 1 cent, and they also beat the revenue by 21.63 million. So that's a good indication here. I know Wall Street did not like it. Stock came down a little bit. Now try to make its way up slowly. Korea is a massive e-commerce market opportunity, poised to exceed 530 billion by 2024. So I think Coupang is already the largest player, e-commerce player in South Korea, and they can really grow nicely. So addressable market, total addressable market is huge, and this company can really do well. And this company is not afraid to really focus on the customers and wow the customers, as they say. And they also did a 15th consecutive quarter over quarter 50% revenue growth. That's a good story here. They tripled, more than tripled their revenue in 2 years. Now it's $18 billion run rate, which is a great trajectory here. And their quarterly active customers increased by 26% to 70 million. That's a good story. They're growing their customer base, and looks like reported revenue increased by 71% in Q2. And they continue to see strong customer growth. That's very important for e-commerce business. And they're balancing their growth and profitability. This is why these young companies, they're not afraid to really grow and spend money to grow. They're initiating new initiatives here. There's a Rocket Fresh for the grocery offering. There is Coupang Eats. I think they're not afraid to spend money and allocate capital to the right areas for the future growth, even though it may not pay off in very short term. That's why you see some short term pain here. Companies focusing on the longer term. And they always prioritize the long term cash flows when they find the opportunity to generate a good long term cash flow. That's where they invest in. And they all also start with small investments, test and iterate. I think that's the way to go. Don't spend too much money. Always innovate and test and take it forward. I think company is doing the right thing here. And they tripled their revenue like we talked about. Now they got transaction volume over $2 billion in softline, in apparel, shoes, and whatnot. And they're also improving their logistics footprint here. They're planning to add more than 14 million square foot into their logistics. This will give them good scale as they grow forward. And they're also very good to their drivers. They're employing full-time drivers. That will help with the delivery. They're also having some good benefits, 5-day work week, insurance, and whatnot. So I think companies focusing on long-term growth, even though employing this full-time driver can eat away from your profit potential, but companies not afraid to really focus on the long term and give some good benefits to these drivers. And trailing 12-month operating cash flow was up. I think that's a good indication here. So overall, I feel company doing the right thing. They're not afraid to spend money on the long-term growth, even though it costs some short-term pain when it comes to Wall Street's expectations. So that's why by looking at this company doing the right thing, they're trying to become Amazon of South Korea. They also have other segments like Eats, something similar to Uber Eats. I think a company doing the right thing. They also growing their footprint when it comes to logistics. That's very key when it comes to delivering goods to customers. So, from an insider trading perspective, I feel maybe some of these insiders are selling a little more. For example, we got here Chief Technology Officer, looks like he sold 11 million shares in August. And then you got Gaurav, who is a CFO. He also sold 5 million. There may be genuine reasons. Maybe it's paying tax or maybe some other reasons, but it's a little high. But I'm not alarmed because I've seen much higher numbers when it comes to insider trading. It also looks like institutions are buying the company right now, so that's why I'm not too much alarmed. I'll be watching this as we go forward. But right now it's okay, to have 16% insiders selling. Given it's a young company, there could be, the lockup expiration and such things. That's why it's okay to see this number, but we would keep a watch on these insider transactions. Good news is institutions are buying slowly. That should really compensate for insider selling. Now, so what should we do? We looked at the technicals, the fundamentals. We looked at the entire landscape of competitors. So with that, from a summing up perspective, I think this is Amazon of South Korea. They have a lot of growth potential ahead of them, and South Korea is a growing market with a lot of people. I think this company can do well. And Coupang, I think they want to wow their customers. I think that's where they're spending more money around their footprint and improving their logistics, hiring the driver. So they're spending money on surprising the customers. That's why it's growing right now, allocating capital at the right area. They have strong Q2 and strong history. They tripled their revenue, as you see here. I think the revenue is up 71%. Nice revenue growth here. 15th consecutive quarterly quarter here, exceeding 50% growth. Um, Quarterly active customers increased by 26% to 70 million. Uh, the revenue per customer grew 36%. I think nice numbers here. Their spending, customers continue to increase their purchase frequency, also great. So they're strengthening their third party offerings. If you look at Amazon.com, they started with the selling on online. Then they started adding more and more third party sellers. I think this company is doing the same thing. They're strengthening their third party offerings to drive the growth here. That's where many of these small and medium sized enterprises or SMEs, they're coming onto this platform, and they're also benefiting in the meantime. That's why this third party offering growth, that's a strong indication that they can scale by bringing in more and more SME customers into their platform. So they're not afraid to find new opportunities and allocate capital to prioritize their long-term future cash flow. That's why you see some short-term pain, because their focus is on the long-term, the future cash flows. And they continue to make progress on their e-commerce logistics centers. So they're planning to add more than 14 million square foot. That should give them the good scale to serve wider population as we go forward. And at this point, stock is completely oversold. So buy at these levels. I have seen many companies like this. After the IPO, stock drops off because Wall Street does not understand them very well. But by the time Wall Street understand the company, stock is already up nicely. That's why this is a good level to buy this company. I would be accumulating this company and hold it for a long time. So with that, thank you very much. Happy investing and trading. Please subscribe.